Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm excited to welcome you to another promising edition of the Forex Morning Mastery. And today, as usual, we are going to be dedicating this analysis to price action based technical analysis as we dive into the ever evolving landscape of the financial corridor. Well, in the last 24, 48 hours, we've seen quite interesting setup along the line. As we all know by now that the US dollar since has been struggling to gain some traction. And though we saw some positive data coming in from the US economic docket yesterday, that is from the retail sales data that came in, though it came in beyond expectations of 0.6% as against the expectation of 0.3%. But the figure is still quite below the previous month, which still makes things a little bit more skeptical for the US dollar. However, there have been some couple of comments from the Federal Reserve officials in the last 3 to 4 days now, speeches from Aka, Williams, and the likes. There have really been no headline statements in their comments so far that will give us an insight into a potential interest rate hike in the month of November. And in that regard, there's been a general consensus that the Federal Reserve is likely not going to be increasing interest rates any further by the month of November based on the current development going on at this point in time. And I think the gold has begun to gain some traction in that regard. So we are going to be deliberating on this as we enter the midweek of this week, which happens to be an important day, of course, which will be determining the direction of price action for the later part of the week. So once again, you are welcome on board. For those who are joining us for the first time, you are highly welcome. I'm very excited to have you around with us. And what we simply do here for the sake of clarity is that as technical traders, we gather here on a daily basis in anticipation of both the London and the New York session, where we come to review our existing positions, if we have any, and of course use the information that we can sniff out from the chart to strategically position ourselves ahead of both the London and the New York session. So this happens on a daily basis, 9:05 a.m. West African time and 8:05 a.m. UTC. So I encourage you to stay tuned in so that you don't miss out on any of the valuable ideas we shall be deliberating on today, and of course be part of our subsequent editions. As the more time you spend with us, the better you get in understanding how our strategy works in this community, and eventually be able to use that information to make your own independent trading decisions. So once again, you are highly welcome on board. Now, with that being said, here we're going to be diving right into the business, and as usual, the first thing we normally do is to check on the economic calendar. And of course, we know that these fundamental factors often manifest on the chart in technical patterns and price movements. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed for us to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. So for today, as usual, we are going to be focusing on economic features from both the United States and the United Kingdom. Of course, these are the economies that are affecting the assets on our watch list for this week. Now, for this week, I am going to first of all click on this week option. So I usually use the FX Street calendar. So then I would like to filter and streamline the countries to only feature the United States and the United Kingdom economic dockets. Then we will let's streamline this to only the high impact and the medium events for today. So let's click on this, and here we go. So for today, Wednesday, October 18th, we have a handful of events we are looking forward to, though we have one single high impact event, and that came in from the United Kingdom economy, which is the consumer price index, which happened about a couple of hours ago. And for those who don't know, the consumer price index is released by the national statistics, and of course it serves as a key indicator to measure inflations and changes in purchasing trends. And generally speaking, a positive data is considered as positive for the pound sterling, while a negative figure is considered as, a low reading is considered as negative. Now, let's look at what the previous data was. The previous data for the month of August, came in at 0.3%, and we had a general consensus projecting 0.4%, and surprisingly, we had a whopping 0.5%, giving us a positive deviation of 0.33, and this is to the positive side of the pound sterling. And we begin to see some reaction in that regard in favor of the pound on our assets. So we are going to be looking at that in detail on what we are going to be doing for today on that asset. Then we also had the PPI core output, which also happened earlier today. We also had a producer price index, all of which came in with positive deviation here. Then later today, we are looking at something from the United States, that is from the housing sector, which is one of the key sectors in the United States. And of course, it determines the direction of the economy. Now, we have the building permits for the month of September. Now, for those who don't know, the building permit is released by the U.S. Bureau at the Department of Commerce. And in fact, the data here shows the number of permits for new construction projects. Now, it implies the movement of corporate investment, that is U.S. economic development, and it tends to cause some volatility to the U.S. dollar too as well. And of course, generally, a growing number of permits is a positive signal for the United States economic docket. Now, if we look at the previous data here, it came in at 1.453 million, that is for the month of August, and we have economists projecting 1.45 million, which is on the lower side too. And then we also have the housing starts, which also is projecting a lesser, I think we have a higher variance to this one, 1.38 million against the 1.283 million. So we are going to be looking forward to what the actual data is going to be, and will it come in as expected, below expectations, or even beyond expectations. Then we also have a handful of speeches coming in from the United States today. Wallace is going to be having a speech, Williams, Bowman, Page, and Cook, all of which are going to be having a speech today, and everyone will be looking forward to see what they have to say. And of course, whatever they say here has a, how do we put it here? It has a considerable influence over financial markets, and their remarks also provide insight into the central bank's outlook on the economy, potential policy shifts, and of course, interest rate changes that may happen in the nearest future. And this, in the long run, it impacts our trading decisions and of course market sentiment. Now, with all the data we have here today, as technical traders, we know that the anticipation of these events alone has a tendency of influencing the market sentiments, which of course will reflect on the chart as price action. Now, talking about price action, the first asset we are going to be taking on today is going to be the US oil spot. While I wait for my chat to open, I see your comment, Ika's Diary. Good morning to you, and I'm very excited to have you here with us this morning. So I wonder why my chat is not coming up, and the internet reception here is quite excellent. So let me refresh this page and let's see if we are going to be seeing some difference. Okay, so it's still bringing back the gold. Let me click on the US All Spot one more time. All right, so here we go. So on the US oil spot, the week has been very choppy so far this week, and the recent spike in oil prices can be attributed to escalating tensions in the Middle East, particularly after a tragic incident at Gaza hospital claiming over hundreds of lives yesterday and sparking fears of potential supply disruption in global supply. And as a result of this, there's been some open interest in the US oil spot, as we saw that huge gap that happened during the early hours of today. As you will see right here, there is this huge gap between the $86.40 area and the $86.80 area before, and this is a sign that we are likely going to be seeing more momentum to the upside. Now let us look at how we started the week and what led to the decisions we made so far this week. Now, at the beginning of the week, it was more of a consolidation phase. As we saw here, price action was confined within the $86.60 level and the $85.90 area, which of course led to the breakout of the resistance line, welcoming our first buy position for the week, which unfortunately went into a loss after moving about 40 pips in our favor. And of course, we had the privilege of joining the bearish momentum after price broke down, retest the structure all the way to the downside, and price moved about 100 pips thereabout. And of course, we did move our stop loss accordingly, and we saw price take us out of our position with a moderate size of profit, or at a worst case scenario, break even. Now, during our live session yesterday, we emphasized the importance of that key level situated at the $85 area. And for those who had watched my video on the US All Spot, and of course, if you are part of our earlier sessions for this week, remember I talked about this level being the neckline of a reversal pattern identified on the 4 hours time frame, and that if the buy pressure persists above or around this $85 area and price action finds it difficult to break through to the downside, then we are likely going to be seeing an uptrend continuation. And of course, if you look at what has been going on in this market in the last 36 hours, you will see how it has become difficult for sellers to break through the $85 area, which of course reveals the presence of buyers around this area. And of course, I actually joined this bullish momentum very late. I should have joined around the $85 area, but because of the expectations that we could likely see a breakdown of that structure, so I missed out on that. But some of us took advantage of that opportunity, because I got some DMs who told me that okay, they took buy position around that area with a stop loss sitting around the $86.50 zone. And for those who did that, well done to you. Well, for me, I took advantage of the buy positions at the breakout of the $85.90 level much more later during the New York session yesterday. And since then, price action had continued to the upside, and currently I have about 135 pips in profit on the first position. And remember that we said we are going to be adding more position if price action goes on to break out of the $86.60 level, which of course triggered another buy position with about 75 pips in profit. So roughly at this point, you should be having a minimum of over 200 pips in profit as we continue to monitor price action here. And for those who took advantage of this opportunity, well done to you for being on standby, capitalizing on this move. Now, the next thing we are going to be doing here, we've always talked about this several times, that as soon as price move very well in our favor, we do want to be moving our stop losses to secure the current position. And of course, I made mention of this on both my TradingView and Telegram platform this morning. And from the current structure here, I'm of the opinion that anywhere around that $86.60 level seems most appropriate to secure this position while we look out for more buying opportunities in this market. And while we are securing our position, please note that you do want to be given enough room for price action to breathe. Now, with a well secured position at this juncture, what is going to be our next line of action? Well, personally, with the way things are going right now, and with the development in the Middle East as regards to the rising tensions between Israel and Hamas going on at this point, I'm of the opinion that majority will still want to continue to open more interest in the US oil spot asset. And as a result of this, I still want to maintain a bullish bias here. And how do we intend to add more position to this trade? What is it that we want to see on this chart that will make us feel comfortable adding more position to our existing trade? Now, from a technical standpoint, since the early hours of today, we have noticed a resistant level situated at the $87.50 zone, which happens to be the highest point price action has been for this week. And with a resistant level here where we have seen a couple of selling pressure rejecting all attempt by the buyers to break out of that structure, for me to buy here, I would want to see price break out of that level. Now, there are two ways to which we can capitalize on this. That is, for those who have been profitable on the US oil spot so far this week, that is, if you have been part of this profitable journey, then you can afford to leverage on the profits you have made so far this week to test waters above the $87.50 area. Now, in that regard, we want to be placing a buy stop order above the $87.50 area to capitalize on that uptrend move, as if price will break out of that resistant line, then it will have taken out all the sell positions there to signal a strength for the buyers. However, if you are new with us and this is going to be your first position on the US oil spot, that is, you're coming in from a clean slate, then I will encourage you to exercise patience and wait for a confirmation before you want to jump into the position. And what I simply mean here is wait for the breakout of structure to happen first of all, then scale down to the lower time frame like your 10 or 15 minutes time frame to look out for retest of structure where we will be getting ready to join that uptrend move. So that is how we are going to be capitalizing on this uptrend scenario at this point in time. However, in as much as we're looking out for buying opportunity, you know how we do it in this community, there are still chances that sellers could still push price to the downside, as the market is still very uncertain at this point. As you will see that since price tested the $87.50 area, we have been noticing some selling pressure around that level. And this could incite a reversal pattern that could push price to the downside. But I'm of the opinion that if it does push price to the downside, it may be a temporary move, like some profit-taking activity in anticipation of the uptrend. Now, if you look at what we said here yesterday as regards to how the market reacted to the key level at the 85 area, you will see that we had something like a reversal pattern in the form of a double bottom structure, where the neckline of that reversal pattern lines up with the $85.90 area. Now, with the breakout of the structure, there are still chances that price could come back and retest that level to incite an uptrend continuation. So what I'm simply saying here is that we cannot ignore the possibilities that sellers could still push price back into the neckline to incite an uptrend continuation. So with this in mind, continued selling pressure around the $87.50 area could incite some counter trend opportunities, which will be a retracement back into the neckline, and that could dovetail to, let's say, about 100 pips thereabouts. So if you're a counter trend trader, you might want to capitalize on this move. But personally, I'm just going to hold on and wait for the price to get into the neckline, where I will be looking for buying setup to join the uptrend to the upside. Now, if price action goes on to break down the structure to the downside, then we might likely be seeing a sell-off here. But trust me, I'm going to be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. So these are my views here on the US All Spot for today. I do hope I made myself clear, but if you need some further clarifications or you need me to shed more light in an aspect you really do not understand, feel free to let me know in the comment section. So in that regard, I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever, while you can also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today's London and New York session. All right. So in the absence of no questions, I want to assume that we are on the same page. So let's continue to hold on to a bullish bias here and looking out for more opportunities above the $87.50 area. Now, with that being said, here on the US All Spot, we shall be moving on to the next asset on our watch list. So the next asset on my watch list for today is the GBPUSD. What an interesting situation we have here. But one thing for sure you will have noticed in this market in the last 1 week is that the market has remained range bound. As you will see, price has been trading between the 1.22200 level and the 1.21250 area, which happens to be our key level for this week. And this further emphasized the level of indecision going on in this market. However, within this range, we will see that there is a bullish sentiment going on right now, as price has been finding higher lows within the structure since the beginning of the week, though price is yet to break out of the 1.22200 area, but it's clear that there is higher lows. Let me show you what I mean here. So we can see this is the lowest point last week, and then we saw higher lows here. we saw a couple of breakdown of structure around this area, but immediately we saw price action go back to continue finding higher lows within the structure. And for me, this is a sign that buyers are gradually gaining momentum behind the scenes. So I am not going to neglect the idea of a bullish momentum at this point in time, especially if price continues to respect those ascending trend line that we spotted right there within the channel. And of course, the data, the consumer price index data that came in this morning also is in favor of the pound sterling. As we saw, it came in beyond expectations at 6.7%, giving us a positive deviation in that regard. So far so good. We have a buy position running, a couple of buy positions. We actually have been buying since the beginning of the week. It's just that the moment we buy, price moves about 60-50 pips, comes back to the entry point, gets taken out again, we go in again every time. This further just emphasizes the level of uncertainty going on in this market. And with the Federal Reserve Chairman's speech coming up tomorrow, we might likely be able to have a stability in this market after his speech, as he will be giving us an insight into the monetary policy of the Federal Reserve and the economic outlook of the United States economic docket, which will maybe tell us if we want to be placing more bets on the GBPUSD. Now, for those who still have a buy position running right now, I would encourage you to move all stop losses to the entry point of the second position. That is anywhere around that 1.21750. Let's secure this current buy position while we continue to look out for more buying opportunities here. And one thing that we talked about here yesterday and we emphasized is that as long as price remains above this ascending trend line, we shall feel very comfortable in that buy position, while we also look out for more opportunities to maximize this move. Now, how do we intend to continue this momentum? Well, we have a level here at the 1.22200 area, a level which we identified in my video on the GBPUSD. So for those who had not watched my video, please check it out. It is, the link to the video is right in the description box of this current video you are watching, so you will be able to see how important this level is on the higher time frame. And if price can break out of this level, in fact, I'm of the opinion that we will be going on a strong bullish momentum. As you will see, this level in the last 1 week had played a major role pushing price to the downside. As you will see, buyers have found it difficult to break through this area since last week's trading session, and this week is not left out at all, as we saw selling pressure resume around that area. So if price can break out of the structure this today or during the later part of this week, this will be the first time price will be breaking out of that structure, and this will be a beautiful signal that we are likely going to be establishing a new uptrend in that regard. So on the GBPUSD for today, I still hold on to a bullish bias as long as price still remains above those double ascending trend lines we spotted here on this chart. So you do want to be marking out those trend lines and levels, as you will be needing them as a reference point to guide your independent trading decisions for today. However, in as much as we're looking out for buying opportunities here, we cannot ignore the potentials of sellers. You know how we do it in this community. We want to keep a balanced perspective. As we are looking at the potentials for buyers, we also want to consider what is at stake for sellers too as well. Now, if we are going to be considering the potentials the sellers have here, first of all, we want to take note of the strength of the sellers around the 1.22200 level, which you can be seeing here in the last 1 week. We have seen how they have consistently rejected all attempts by the buyers to break out of that structure. Now, if this persists in such a way that price action goes on to break down this ascending trend line, then at this point I want to start considering selling. Now remember what I said here, the only condition that will make me sell at this juncture in the market is for price to break down that ascending trend line, and not only break down that structure. So once the breakdown happens, we are not getting too excited, neither are we having a sell stop order below that structure, but we want to wait for some confirmations to give us an opportunity to join the downtrend move. And the confirmation we are going to be looking out for is going to be signs that buyers are finding it difficult to break back above the ascending trend lines, which of course would reflect on the chart as a retest of structure, where continued selling pressure below these levels will be welcoming that selling opportunities. And if price continues to break down the key level for this week at the 1.21250, then we will be adding more sell position to our existing trade. So for today's trading session, that trend line there within that range is going to be playing a major role in determining the direction of price action. So at this point in time, we maintain a bullish bias since price still remains above that trend line, and we are not selling unless a breakdown retest of that ascending trend line happens before we jump into a sell position. So these are my views here on the GBPUSD for today's trading session, and I don't know if you have any questions or you need me to do some clarifications in that regard. Feel free to let me know in the comment section, and trust me, I am here and willing to be of help in that regard. So I will be taking the next 10 to 15 seconds to see if there are any questions, while you can also use that time to mark out these levels on your chart. Sorry, I had a little bit of network itch there. It just went out and came back quite immediately. So I do hope that we are still live. I still hope we are still live. Everything is showing that we are live right here. Please let me know over there if things are quite okay, if you can hear me loud and clear, and if the video is still playing out there, please let me know so that I can confirm that we are all on the same page. So please let me know in the comment section. I really appreciate your feedbacks in that regard. So with that being said here, let's dive right into the next and of course the last asset on our watch list for today. Now my chart here is still saying that I'm offline, but okay, I think it just comes up. Please let me know in the comment section if you can still see me, you can still hear me loud and clear without distortion, so that I can know we're on the same page. The network just intermittently dropped. All right, I think we are back on. Okay, so the next asset on our watch list for today is my favorite, and that is the XAUUSD. Well, it pays to be very patient, as if we have a sense of direction, we do want to be holding on to that bias as long as the structure does not state otherwise. And this is the case scenario we are witnessing on the XAUUSD right now. Well, for those of us who are with me on both my TradingView and Telegram platform, you must have gotten an update as regards to how we are going to be managing our positions for today. Okay, I see your comment, Sheriff Abdukadri. Good morning to you. Thank you very much for your confirmation. Hiker's Diary. Lade Daramola. Oh, thank you very, very much, guys. I really, really do appreciate your feedback. So thank you very much, guys. So let's go back into what we are talking about here. So on the gold spot, the price of gold has been steadily increasing in the last 1 week now, and the uptrend can be attributed to the escalating geopolitical tensions between Israel and Hamas as investors seek the safety of gold, which of course is popularly known as a safe haven asset across participants in the market. And given the current market condition, it is advisable to secure these current buy positions that we have right now, as we currently have about 4 positions running with over 500 pips in profit. Now, remember yesterday we talked about the potential of an uptrend. Remember, we saw this, hold on a second, we saw this impulsive move that happened last week, giving us a situation of an uptrend possibility in this market. Though we were thinking that price may retrace into this area before the uptrend scenario happened, but you know how the market does. That is why it's always good for us to be on standby for any possibility that could happen. We saw how the 1,915 area became a strong resistance for sellers as price found it difficult to break through that area for the last 24, 36, 48 hours in the market. And during our live session yesterday, I told us all that because of this fit here, that we are likely going to be seeing an uptrend move. Then in addition to that observation was this uptrend continuation pattern that I was able to spot here. After lining this up, we had a symmetrical triangle, which is a strong impulsive uptrend continuation pattern. And of course, one of the things we were looking forward to yesterday was the breakout of this resistant line of this triangle for us to join an uptrend move, and that was exactly what happened yesterday. We saw price break out and retest that 1,918 level to trigger our first buy position for the week. And since yesterday, we have been buying this asset. And if you were part of our live session yesterday, I told you all that we are going to be maximizing the potential of this bullish move as we have levels like the 1,923, $1,927.50 level, and of course the $1,930 area to maximize the potential of this move. And we saw what happened. We saw consistent breakout of the structure to trigger more buy positions in this market. And for those of us who are part of this profitable trade, well done and kudos to you for being on standby to capitalize on this move. Now, of course, you know what we are going to be doing next right now. We want to be moving our stop losses and secure this current buy position. I made mention of this on my public platform this morning. And based on the current structure, let me zoom right in. Based on the current structure we have here, we shall be moving all our stop losses to that area around the 1,935 zone. Remember, we do want to be giving enough room for price action to breathe. Now, with a well-secured position at this juncture, what is our next line of action for today's trading session? Well, for those of us who are with me on my TradingView and Telegram platform, you must have gotten an update to this, as I was able to spot this 1,939 area. That was a typographical error. So let me replace that. So we have the 1,939. In fact, I want to readjust this. You must have had a buy position trigger. I do have a buy position triggered, but I still want to readjust this to a round figure. Let's place it at the 1,940. I think that captures most of the pivot highs here. So let's mark it as 1,940 instead. So I will just readjust this to 1,940 level. Let's make it a round figure. So that's the resistant line for this week. So let me just zoom things in so that we can see things clearly. So our center of focus for today is basically going to be between the 1,940 and the 1939 level has this area here. You will see that since price tested the 1940 zone during the Asian session, we begin to see price oscillate within that range of the 1940 and the 1936 area. So let me just mark this one out, $1,936 level. So the oscillation here is a clear sign that there's been an indecision going on right now. And of course, you know how we do it in this community. Whenever price action falls into this kind of range, the next thing we want to be doing is to exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line at the 1936 for us to sell. Now, if we consider the strong impulsive move that brought us to this point, this whole consolidation phase has a high chance of transitioning into an uptrend continuation pattern in the form of a bullish rectangle. Now, a breakout of the 1940 is going to make quite a lot of sense to join an uptrend scenario. Now, there are two ways to which we can capitalize on this move. Now, for those of us who have been part of this profitable journey so far this week, at this point, you are very profitable, so you can afford to leverage on the profit you had made so far this week to test waters above the 1940 level to see if that breakout is going to work. And if it doesn't work, we know that we are only risking some of the profit we had made so far this week. So placing a buy stop order above the 1940 seems quite reasonable at this point, and having your stop loss right below the 1936, which will be dovetailing to about 35 to 40 pips thereabout. However, if you are new with us and this is your first time taking an trading opportunity with us on the XAUUSD, I will suggest that you exercise patience and wait for the breakout, then confirmation in the form of a retest of structure before you want to be joining the uptrend move. So this is how we are going to be capitalizing on that uptrend scenario if price goes on to break out of the 1940 level. However, in as much as we're looking out for buying opportunities, you know how we do it in this community. We also want to keep tabs with the opposite direction too as well. Now, if you look at the situation here, you will see that since the beginning, is it the beginning of this week? Oh, since last week, Friday, we have an ascending trend line which has been supporting this bullish momentum. And with the way things are going right now, as price action currently oscillates within the 1940 and the 1936 with signs of selling pressure around that 1940 zone, we might be seeing some retracement as participants who had bought at a very cheap price may want to be doing some profit-taking activities, which would reflect on the chart as price retracing a breakdown retest of the 1936 to incite a sell-off probably into any of these levels, let's say the 1930, the $1,927.50 level, or the 1923, which interestingly shares a confluence with that ascending trend line, where I'm of the opinion that we might be seeing an uptrend continuation. So we want to take all this into consideration. We are not going to be selling unless price breaks down the 1936 area. So breakdown retest of structure. So we are looking at a minimum of 60 pips in profit and the maximum of 135 pips in profit. That is on a counter trend opportunity. So to sell, we want to see a breakdown happen of the 1936. Then please wait for your confirmations like retest of structure on our lower time frame, say the 5, 10, or 15 minutes time frame, to look out for selling opportunities there. Then if price continues to drop to the downside, we have key levels at the 1930, $1,927.50 area, and of course the 1923 levels, where we want to see how the market would react to that structure to give us an insight into probably adding more sell position or getting ready for an uptrend continuation. But trust me, I'm going to be with you on both my TradingView and Telegram platforms to give you updates as at when due. And of course, if you are going to be part of the live XAUUSD live window coming up later today during the New York session, then you will be part of the real-time price action trading activities that will be going on this platform. So on that regard, this is my view here on the XAUUSD. So like I said, we are not selling unless the breakdown retest of the 1,936 happens, and we'll continue to look out for more buying opportunities above the 1,940 area. So if you have any questions whatsoever as regards to my explanations, or you need me to do some further clarifications to what you really do not understand, let me know in the comment section. Trust me, I am here and willing to be of help in that regard. So with that being said, I will be taking the next 10 to 15 seconds to see if there are any questions, and if you have, you can use that time to mark out these levels on your chart. All right, so I see your comments here. Hiker's Diary. Ikers is asking that can we consider the 1,927 and the 1,928 as a demand zone? Okay, let's look at this. 1,928, where is that? Okay, somewhere around here. And the 1,927. Okay, so that's a very tight demand zone there. Well, we can, of course, we can. If you recollect what I was explaining earlier, I said something that that we want to, if price drops below the 1,936, which I doubt will happen. If it does happen, we want to be part of that move. If price drops below the 1,936, we have a wide range of demand zone here. We have the 1,930. We have the $1,927.50 level, and of course we have the 1,923 area, which interestingly lines up with that ascending trend line I shared with you earlier. Remember, let me zoom out so we can see. So this is the ascending trend line here, and of course you know how we use our ascending trend line in this community. As long as price remains above that ascending trend line, we shall feel comfortable in a buy position. So in fact, we have a wide range of demand zone here between the 1,930 and the 1,923 area, where depending on how price reacts to this level today, if it so drops, will be determining if we are going to be buying or adding more sell position. But trust me, I will be with you in the my TradingView and Telegram platforms to give you updates. And of course, if you are part of the XAUUSD live window during the New York session, you will see how we are going to be capitalizing on that opportunity. Now, you said here that 15 minutes time frame. I don't look at 15 minutes time frame on a long-term view. The 1 hour time frame is my execution time frame, so I want to make sure that I focus on the 1 hour time frame. I only look at the 15 minutes time frame only when I'm looking out for entry confirmations. And since we are not looking at entry confirmations here, this is what we are going to be looking at for today. So those areas you mentioned are demand zones, and in fact it's way bigger than that. So I think I answered your question there, Ika's Diary. Please let me know in the comment section. And in the absence of no other questions, I want to confirm that we are all on the same page. Now, that reminds me, if you have found this content helpful and useful in making your independent trading decisions for both the London and New York session today, please kindly support this project by giving the video a thumbs up. Your likes are very valuable to me, and in fact it also helps the algorithm to promote the video to a wider audience of traders who may find this content beneficial to them. And thank you in advance for doing so. And for those who had liked this video already, thank you very much. I really do appreciate your support. So I look forward to your likes, please. I really appreciate that as you do so. Then later today, we are going to be having the XAUUSD live window. So I will just try to look for the link and share it with you in the comment section. So I will be doing that right now. So live window. Okay, so here we go. So you have the links right in the comment section. So the XAUUSD live window is a platform that was born out of a popular demand in this community, where majority were asking that we have a platform where we can all monitor the XAUUSD real time here on this platform. So that is the platform there. It's the live starts 5 to 10 minutes into the New York session. So I look forward to see you guys right in the comment section there. So it's on this note I want to wish you all the best of luck today. For those who joined us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And in fact, I encourage you to be part of our subsequent editions, as the more time you spend with us, the better you get to understand how this strategy works and eventually be able to independently use this information to make your own trading decisions on your own account. So once again, you are welcome, and I look forward to seeing more of you tomorrow, same time, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing so far, and at the same time get ready for tomorrow's trading session. So see you all in the comment section of both my Trading View and Telegram platform, and of course during the XAUUSD live window as we continue to monitor price action. Do have a wonderful evening, everyone. Bye-bye.